So Palantir stock has gone up around 600% since its bottom and just got included in the S&P 500. And my impression is that no matter where you look, everybody's telling you to buy Palantir stock.
Got to ask you about Palantir. You said it's the greatest investment opportunity of all time, your lifetime.
People are saying Palantir is the new Tesla, and that even trading at such crazy metrics, this stock has much more room to go.
The way you have to think about it is, I'm thinking of more of it like a Tesla. So if you could have bought Tesla 7 or 8 years ago, that had an astronomical valuation because of what lies in front of it.
So in today's video, let's first see what Palantir does, we'll understand why this is indeed a good company, and in the end we'll check whether this stock is a good investment or not, whether this stock is cheap or expensive. Now, before we begin, just reminding you this is not investment advice. So first, what does Palantir do and why is it a good company? And by the way, if you already know this stuff, just jump to the chapter you prefer to watch. Anyway, Palantir was founded in 2003, starting out in the intelligence and defense sector. In fact, one of Palantir's first investors and clients was the CIA, and today, over 20 years later, Palantir's AI software is used by several other government agencies, such as the Department of Defense, the FBI, and the Marine Corps. And that's one of the reasons why Palantir is so special, because of its incredible list of clients, which includes Airbus, United Airlines, Chrysler, and BP. Now, another reason why Palantir is a company everybody wants to own is because of the quality of the technology they've developed. You know, the more I research, the more I realize just how widely their AI software is being used everywhere. For instance, Palantir's AI software is used in warfare, in environments such as Ukraine. Some sources, by the way, even claim that Palantir's technology played a crucial role in the operation to kill Osama bin Laden. On the other hand, their technology is being applied on completely different fronts in dozens of different sectors. Chrysler and Airbus, for example, use Palantir's software to spot potential faults and manufacturing issues in their cars and airplanes. BP, the British oil company, uses Palantir's technology to analyze drilling data. Tampa General Hospital, on the other hand, uses Palantir AI software to improve bed placement, patient scheduling, and staffing allocation. So as you can see, Palantir has developed quite a masterpiece here, and that's the second reason why people love this company, because of its technology. Now, before we continue to this company's financials, if you are enjoying this content, don't forget to leave your like, and I also invite you to subscribe. Thanks. The third reason why people love Palantir is because this business is indeed an amazing one. As we can see here, revenue has been growing a lot, from $600 million in 2018 to $2.5 billion nowadays, which represents a 31.5% annual growth rate on average. Keep this in mind because it will be important for us later to calculate Palantir's fair price. Besides, Palantir has also great margins too. For example, since 2018, the worst gross margin they've delivered stood at 67.3%, which is already excellent. But as margins kept expanding, now we are dealing with a 81.4% gross margin, which is outstanding. Now, scrolling down, we have a 12% operating margin. It improved a lot. It was pretty negative, and now it's pretty green. Besides, Palantir is a profitable company too, net margin at 16%, pretty good. Now, why is Palantir's net margin bigger than its operating margin? Why does this happen? Because Palantir had a big financial gain here. Where is it? Interest and investment income. Here in the last 12 months, Palantir had a financial gain of $170 million. And this happened because besides having a lot of cash on hands, here cash and cash equivalents, $500 million, Palantir also has almost $3.5 billion in short-term investments while having no debt at all. Here, long-term debt, 0. So that's why they are having such financial gains. And that's why their net income is bigger than their operating income. And by the way, this platform I'm using is called Seeking Alpha. It gives me all this financial data, but the most interesting part here is that Seeking Alpha gives me access to all these articles here. And this facilitates a lot my research process, as I can read what others have already written about the investment thesis I'm studying. Anyway, I will leave a link to Seeking Alpha in this video's description with a 1-week free trial and a 10% discount. Have fun. Now, besides presenting a lot of growth and having a very strong balance sheet together with great margins, Palantir also generates a lot of cash, as we will see now. So as we can see here, Palantir in the last 12 months delivered more than $700 million on operating cash flow, which represents a 28% operating cash flow margin, which is very, very good. And as Palantir's business doesn't require a large capex, this means that almost all the operating cash flow becomes free cash flow. So I pretty much like what I see here. So in summary, Palantir is a company that's been presenting a lot of growth, right? They also have a very strong balance sheet. They also have a very good product, a very good technology, an excellent technology. They also have a profitable operation. And ultimately, they also generate a lot of cash. So, again, I pretty much like what I see here. So if Palantir is such a great company, shouldn't us all be buying its shares? I mean, what's wrong with investing in Palantir stock? Well, the problem with buying Palantir stock is that this stock is just too expensive. As I've explained in this video, investing well is not exactly just about buying great companies, but rather cheap ones. Of course, you should prefer good companies, right? But everything has a price. And Palantir is trading at very, very high valuation levels. For instance, in the last 12 months, Palantir delivered $2.5 billion in revenue, right? Now, what's their market cap? Their market cap stands at almost $100 billion. So 100 divided by 2.5, this means that Palantir is trading at 40 times revenue. This is a very high multiple, and as a rule of thumb, you should avoid companies trading at such valuation metrics. But you may say I'm looking at it in the wrong way because it's about what lies ahead of them. It's about the growth potential, right? After all, there's a huge addressable market for Palantir's products. So the question is, how much does Palantir have to grow for the current price of its shares to be justifiable? That's the question we need to ask ourselves. And that's what we are going to talk about now. But before we dive into Palantir's valuation, don't forget to leave your like, and I also invite you, again, to subscribe. Your support helps me a lot to continue making these videos. Anyway, let's use the price to sales multiple to evaluate Palantir stock. Okay, so as we see here, the average growth rate for Palantir's revenue is around 27.5%. So let's project here 30%. So here in our projection, Palantir is going to grow around 30% per year for the next 7 years until 2030. Now, what about the future multiple? So as we've seen, Palantir is currently trading at 40 times revenue. So though this is a very high multiple, let's experiment with it a little bit. So let's project 40 here. This means that the fair price for the stock in 2030, according to these assumptions, should be $250. Now, if we discount that to the present using a 10% discount rate, we arrive at the fair price for the stock today, which, according to these premises, should be $110 $28, which in turn would represent an upside of almost 200% from where this stock is trading now. Now, let's keep in mind that a multiple of 40 times revenue is a very high multiple, and let's also keep in mind that the more mature a company gets, the lower the multiple it tends to trade at. So it's very unlikely, at least in my opinion, that Palantir will still be trading at these valuation levels in 2030. But anyway, let's play with these numbers for a second. But if you think these premises are realistic and achievable, well, it may not be a bad idea to invest in Palantir, right? And again, just reminding you, this is not investment advice. And I bet many of you will say that Palantir is going to grow much more, like at 50% for the next 7 years, which would result in a fair price today of $350. So we would be talking about a 700% upside here from where this stock is trading now. And of course, this can happen, but I just rather not count on it. My point is, these are very aggressive assumptions. A 50% growth rate and a 40 price to sales multiple are very aggressive premises. Now, what happens if we don't count on such sky-high premises? What happens if the market stops assigning such crazy multiples for this company? And what if Palantir doesn't deliver amazing results? So what if Palantir ends up growing at only 25% per year for the next 7 years? And what if in the future it ends up trading at a more reasonable, at a more normal multiple? Let's say 15 times revenue, okay? And just to be clear, 15 times revenue is still a very high multiple. It's 2 times what Tesla trades at. So in this case, this stock could be considered overvalued at the current levels. And its fair price should be $36.5, not $43. And what if in the future it ends up trading at 10 times revenue, which, by the way, is still high. 10 times revenue. So in this case, Palantir's fair price would be $24. So here we would be talking about a downside of almost 50%. So it seems to me that to buy the stock, I need to be counting on very, very optimistic premises. Otherwise, if this company delivers more normal results, and if all this hype goes away, and if the market starts assigning more normal multiples for this company, if this happens, I will probably lose money. So that's why I prefer not to invest in Palantir. Because for this stock to continue going higher in a rational, fundamental driven way, Palantir needs to deliver outstanding, unbelievable results. As I've said several times here on my channel, I simply prefer to buy companies, stocks that are priced with more pessimistic assumptions, because this way, when you buy a company being priced at low expectations, this way you don't need the company to deliver amazing results to make money. So this makes the game easier. So to close this video, that's why I think Palantir stock is not a good investment in the long run, though Palantir is indeed a good company. Anyway, I will leave this Excel sheet in this video's description so you can play with the numbers yourself and get to your own conclusions, okay? Anyway, that's it for today. See you next time.